Hi there, welcome to Kneppy Invest and welcome to three companies on the ASX that release interesting or intriguing Appendix 4Cs or 5Bs for mining companies for the June quarter 2025. I'm recording this video on the 7th of August, intending to release it towards late September or early October. Of course, you know exactly when I've released this because you're watching it. You're watching it. Anyway, now this particular video is featuring three companies that are fairly large. In fact, we're talking about billion-dollar companies, including West African Resources, Droneshield, and also Capricorn Metals. Now, both West African Resources and Capricorn Metals are gold producers, and I'm a little bit surprised they're still releasing Appendix 5Bs because they're both profitable, both operating cash flow and free cash flow positive. And typically, when a company has achieved that for a certain period of time, the ASX tells them they don't have to produce any more Appendix 5Bs, but they're still doing it. And I'm happy that they're still doing it. And Droneshield, well, Droneshield cash receipts are quite volatile, and a lot of interest in that company with a valuation of about $3 billion. So what I'm going to do in this video is I'll briefly go through what these three companies do, fairly easy for all three, and then we'll have a look at the Appendix 4C or 5B for the June quarter, and then the cash receipts history, and then we'll have a look at the chart. Okay, so first company I'll be focusing on in today's video is West African Resources. And now this company is a gold producer with projects in Burkina Faso. In fact, it is West Africa's growing mid-tier gold producer. So they do have a current project in Burkina Faso that's in production, and they have another one going to come in production soonish. So Burkina Faso is a fairly small company, landlocked country, not company, in West Africa. Exactly what it says. There it is. There's a map right there. Burkina Faso, although this is like a zoomed-in map. Anyway, so I don't know much else about Burkina Faso. It's in West Africa, and there is a bit of a sovereign risk. So these type of companies always have a bit of a discount because of that sovereign risk. Now, in saying that, even though this company has gone through a fair few things in the past 5 years, including a coup, this company hasn't really had their projects all that affected. Anyway, a pretty big company with a market cap of about $3 billion. So let's have a look at why I've included this company in this particular video. Well, it's got to be fairly obvious when we have a look at their Appendix 5B, which is called Quarterly Cash Flow Report. So this company has separated the activities and cash flow into two different documents, and I do like that. They've also just released a presentation, a Diggers and Dealers presentation on the 6th of August. So let's have a look at the cash flow report. And this is the first thing I always look at when a company releases an Appendix 5B or 4C. So receipts of customers, $254 million. So this is not a small company. We already know that, but they are producing a fair bit of gold. And the company operating cash flow positive by $86 million for the quarter, and for the year so far, $160 million. So that's analyzed. We're talking about $320 million for the year, and you probably shouldn't do that, but at least you got half a year, so that's a nice little sample size. So this company is currently valued 10 times operating cash flow. It's not that richly valued. Now, they have been spending a fair bit of money on property, plant, and equipment and exploration and evaluation. Particularly the property, plant, and equipment is because of that new mine they're going into production soon. Now, they had a lot of debt when they first went into production. They paid off that debt, and now the debt has increased again because of the new project, the new mine they want to get into production. So $426 million of debt, but they should be able to cover that fairly quickly when they ramp up that new mine. Okay, so that's main things I look at when I am looking at Appendix 4C or 5B. Sometimes I look at the cash on hand, and currently this company has $279 million of cash on hand. So plenty of cash, even though they have a little bit of debt. Now, you can have a look at the activity report. I sometimes won't for mining companies, but I sometimes will have a glance through a look, but not all the times. For instance, sometimes I used to make a joke that when a mining company mentions no significant social, health, or safety incidents, that means it's a bad quarter or a bad period. I saw a lot of this back in 2015-16 when a mining company released their results. First thing they mentioned is, hey, no one died, no one died. And that's just a sort of inside joke that I have with myself. But West African Resources did have a pretty good quarter. And they still mention, first thing they mentioned, no significant social, health, or safety incidents. Talk about gold production, gold sales, cash flow. So everything we've already talked about. And they also mentioned that the new mine, the construction, delivered ahead of schedule and under budget. They poured the first maiden gold bars on the 26th of June 2025, ramping up to full production underway, grid power connection scheduled for the third quarter. So this is a really interesting period for West African Resources. And one of the reasons I actually took a position in West African Resources is just after they went to production for the first mine, I thought this company was undervalued. And then I realized they're going to have put another mine into production. And I just didn't think at that point in time the market was realizing that. Maybe the market was, but it was just giving this company a fairly big discount because of that sovereign risk. Anyway, so let's have a look at the cash receipts history for this company. And fun enough, I have not opened up this particular document. So this is just online Excel opening up for me. I completely forgot about it, but it doesn't take me very long. Oh, still loading. I'm sorry, online. Whoops. Find WAF. And here we go. So I bought some shares in West African Resources probably about 5 years ago now. No real reason to sell my shares. And we can see that receipts have generally increased through time. The really good thing is this was a record quarter in terms of receipts without the new mine in production. So that's very exciting. Now, if you go back to 2022, you did see a bit of a dip in receipts, and then receipts started going up again. So the main thing when I look at these sort of receipts history, I want to see receipts, or prefer to see receipts, growing through time. That is very important for me. I want to see revenue growing through time. And we see that with West African Resources. Now, does that translate to the chart? Now, this is the weekly chart for the company. And funny enough, I'm going to have to, everything's breaking down. Going to have to auto fit. There we go. So if we go back to say 2019, 2021, I bought in, you can see the share price has increased a fair bit since then. So share price has gone up, we'll say 7 or 8-fold since 2019, or since they went into production in the first mine. We saw a bit of a dip back in 2023. I was a little bit concerned at that point, but share price started to rise again. And over the last, say, year and a half, share price has more than doubled, in fact, nearly tripled. And again, because gold prices are going up. So that is beneficial for this company. So again, even though the company is growing, going to have another mine in production, the share price of West African Resources is still going to be highly affected or influenced by the price of gold. It's not the only thing, but it will be highly influenced. Okay, so now on to, shall we talk about the other gold producer, or should we just separate the two gold producers with Droneshield? Okay, Droneshield, yeah, counter drone, simplified. So this is, I suppose, this is a real growth area in the world right now, because a lot of countries have realized that they can use drones very efficiently and effectively in wars. And that's what we're seeing now. Many countries are using drones. In fact, I'd say maybe it's the main, what do you call it? Main offensive use that countries are now employing when it comes to war. So, of course, these sort of companies that are producing technology that protects countries from drone attacks are going to be very big. Now, a lot of competition in this space. There is a lot of competition. So Droneshield is not the only company doing that, but it is taking advantage of this growth sector. So have a look at their website, go through exactly their products. So quite a few products here. No, not capabilities, products. Products. Oh, there was an error there. Oh, can't find that page. Oh, a bit of an error on Droneshield's website. Sectors make sense: military, critical infrastructure, public safety, etc., capabilities, electronic warfare, AI identification. So it's not only war, it's other stuff as well, but it's mostly electronic warfare. Okay, so that's Droneshield. Now, a lot of interests in this company right now, but we've seen this in the past, a lot of interest, and then the interest dies away, and then the interest comes back. So let's see how this company has performed in the last quarter. And of course, it was a pretty good quarter from the company. But we'll have a look at the cash receipts history, and you'll see that cash receipts for this company can be quite lumpy. Okay, so they released their Appendix 4C on the 30th of July. And this did impress. This did impress. Not only impressed me, I'm pretty sure it impressed the market. Now, Droneshield has been releasing quite a few contract wins. There it is, an initial contract announcement. Oh, not as many. Oh, that's only 1 month. Let's go 3 months. There is $11.7 million Department of Defense research contract, $9.7 million Latin American contract, $61.6 million European military contract. So all these contracts just pile up. One contract in itself may not be all that powerful, although 61.6 million is pretty big. One contract in itself may not be all that powerful, but when you get a group of them over a 3-month period, yeah, it's suggesting there is a lot of tailwinds within this industry. Okay. Now, on occasion, you'll see a really good quarter for Droneshield in terms of cash receipts. And as I mentioned before, we'll have a look at cash receipts history in a second or so, and you'll be able to see that. Now, this particular quarter was pretty good. Receipts, $44 million. Operating cash flow positive, 13.4. Now, this company has tended to be, when it comes to capital expenditure, in fact, not there. If you have a look at product manufacturing operating costs, they do on occasion spend a fair bit of money there. In fact, last quarter, they spent $20 million on product manufacturing operating costs. This quarter, only $9.5 million. So sometimes you'll see product manufacturing operating costs be significantly higher in one quarter, and that could be just inventory, building up inventory, that sort of thing. But operating cash flow positive this quarter, but for the year to date, not operating cash flow positive. So all depends on the quarter for this type of company. And a little bit of spending in investing and financing activities, but not a lot. A lot of cash on hand, $203.7 million of cash on hand. So they built up the cash nicely with a couple of raisings, that sort of thing, and no debt, which is exactly what I like to see. Now, if you have a look at their commentary, they do have some nice graphs here, which I do like to look at. So revenue, committed revenue, full-year revenue, half-year revenue, customer cash receipts. Now, this is just a yearly basis, so they haven't broken down in quarter, which is probably a smart thing to do, because when we have a look at cash receipts on a quarterly basis, you can see it is quite lumpy. And when you look at cash receipts or revenue on a yearly basis, that sort of smooths out any sort of lumpiness. But in saying that, cash receipts not quite up to 2023 levels, but this is only 6 months. So definitely this will be a record year for this company in terms of revenue and also receipts. I do like the very fact they have gross profit and gross profit margin. So gross profit margins look like it has stabilized at about 70 to 73%. And they also have SaaS revenue, which is sort of exciting, because also SaaS, because it's a recurring revenue stream, that can also smooth out lumpiness. So that's sort of exciting as well. Okay, for me, this sort of company is more of a trading stock right now, because we do see a lot of interest in this company out there. And the company is not that cheap. When I say that, I mean this company has a market cap of $3 billion, $3.58 billion. So a lot of already potential price into Droneshield. Okay, so let's have a look at the cash receipts history. Okay, let's go to find. Whoops. Droneshield, DRO. Okay, so this company has been on the ASX for almost 10 years, and nothing much for the first 3 or 4 years. And then the company started to see a bit of business back in 2021. They had a really good quarter. So $7.4 million receipts in the June quarter 2021. I still remember that, thinking, ooh, this is exciting. And the receipts pulled back significantly, back to 1.7 million. But you can definitely see receipts growing. Now, it's a little bit harder to see here because of a couple of really good quarters, but receipts were growing quarter on quarter. And then in the December quarter 2023, receipts went up to 47.9 million and then back down to 7.1. So again, a bit of lumpiness there. But the trend is definitely up. Now, funny enough, this previous quarter, the June quarter, was not a record receipts quarter, but definitely you can see a trend here when it comes to receipts for Droneshield. And this makes the company exciting, really, really exciting when you see this sort of growth. But the only problem, again, is the valuation. If this company had a market cap of 300 million, I'd be all over this, like some sort of analogy that I can't think of right now. Anyway, let's have a look at the chart for Droneshield. Now, we saw yesterday, from when I'm recording this on the 6th of August, was it 6th of August or the day before, that Electro-Optic Systems released a massive contract win in terms of drone protection using lasers. And we have seen the share price of both companies go on a bit of a tear. So Droneshield much higher, share price much higher than what it got to back during the last hype period, which was just over 1 year ago. Yeah, just over 1 year ago, 16th of July 2024, share price got to $2.80. Now it's at $4.10. So a pretty nice chart for Droneshield. But the question becomes, how much further can it run from here? How much further can it run from here? Anyway, so that's Droneshield. Now on to Capricorn Metals, another gold producer on the ASX. This one does not have any sovereign risk because it has operations in Australia. In fact, Western Australia. Two gold projects, one near Newman, the other one, Paynes Find, sort of northeast of Perth. So two of these projects, Karlawinda and Mount Gibson. I always get a little bit mixed up when they do mention Mount Gibson because there's another company on the ASX called Mount Gibson, but that's iron ore, although Mount Gibson is getting into something else. I think Mount Gibson, the iron ore company, might be getting to gold, if I remember correctly. Anyway, so they acquired the Mount Gibson in July 2021, and the Karlawinda has been in operation since June 2021. Okay, so let's have a look at this company's Appendix 5B. And just like West African Resources, I'm a little surprised this company is still required to release Appendix 5Bs. Maybe they've been told they don't have to and they're just ignoring it, which a few companies have done that. They also released a presentation at the Diggers and Dealers Mining Forum, released that on the 5th of August. So let's have a look at their Appendix 5B. They combine the activities and the cash flow report into the one document. I don't mind that, but I do prefer when companies separate them. And the main reason behind that is when they combine them, you do have to scroll down. And when they separate them, usually what I'm looking for is on the first page. Okay, so Capricorn Metals, $184 million of cash receipts in this quarter. Operating cash flow positive, $101.3 million for a quarter. And for the year, $248 million. So you can just see this, when you compare this quarter to the year, not only with receipts, but also operating activities, cash flow, this was a pretty good quarter. This was a pretty good quarter. So they might be expanding their production just based off this. And when you have a look at cash outflow from investing activities, not a lot of spending there. So this company is free cash flow positive as well, and by a fair bit. What about cash on hand? In fact, the other thing they did is they repaid loans, which I love to see, $50 million in this particular quarter. I love when a mining company is flowing in cash, they decide to pay off debt instead of doing any sort of other capital allocation decision, like buying another mining project at above good value anyway. Anyway, cash on hand, $355 million. So they have expanded the cash on hand, even though they repay debt. That's good to see. And do they have much debt left? None. $2 million of debt left. So yeah, this is the sort of mining company I love. Now, there will be some people out there saying, oh, they should be taking advantage of debt or the low cost of debt, that sort of thing. I'm not a big fan of that, but I don't mind having a little bit of debt. But for me, that's not that important. Okay. You can have a look at their commentary here. I can't remember anything from this, although they do mention that the year-to-date gold production was within the financial year 25 guidance, but it was towards the top end. Now, when something is towards the top end, say gold production or revenue or profit is towards the top end of a guidance range, I consider that a beat. So, for instance, with Capricorn Metals, their range for production was between 110,000 and 120,000. For me, 115,000 is their aim. Anything below 115,000 is a miss. Anything above 115,000 is a hit. Anyway, and ASIC, they also usually guide for ASIC. And ASIC for this quarter was 1,381, which was towards the bottom of their guidance range, quite close to the bottom. So that's another good sign that this company had maybe not a much better quarter, but this company had a better quarter or better year, because this is year to date, had a better year than expected. And typically when that happens, the share price should expand because there's new information and the market really responds to new information, particularly if it's, well, actually not. I was going to say, particularly if it's positive, but if it's positive or negative, the market will react. Okay, so let's have a look at the cash receipts history for Capricorn Metals, CMM. I actually used to own Capricorn Metals, and then for some reason I sold out, and maybe I shouldn't have done that. Okay, here it is. Here it is. Capricorn Metals, because this is a fairly similar cash receipts history than we saw with West African, because cash receipts have been going up through time. Not every single quarter, but they've been going up, and this was a record quarter for Capricorn. So this is exactly what I want to see for any company, no matter if they're a mining company or not. Okay, so let's have a look at the chart for Capricorn, and I'm assuming this is going to look pretty good as well. It should, because nothing's going wrong with the company. And in fact, this quarter was better than expected. In fact, the year was better than expected. And this daily chart is a great daily chart, beautiful daily chart. And I assume the weekly chart is pretty good as well. In fact, this is an amazing weekly chart. In fact, the share price broke out back in 2019. When they go in production? 2021. So share price broke out in July 2019. A beautiful breakout, up 62.9% in 1 week. Maybe I should study. We should study what happened that week, so we can see patterns, any sort of patterns. So if you see this sort of announcement in the future, buy some shares in that company, because the share price of Capricorn since then has gone up from 80 cents to $9.86. So there would be some experts who say after that rise in the July week, they'll say you're too late. You're too late. You've missed the rise. You're too late. And the reason I say that is I've heard it. I've heard experts say that. You have to be in before. No, you don't. This shows you don't have to be in before. You don't have to be in before, because this is an absolutely brilliant chart. It just makes me sad that I sold out. Don't know why. Okay, that's it for this particular look at 3 interesting or intriguing Appendix 4Cs or 5Bs that were released in the June quarter. And these 3 companies are quite big, including West African Resources, 404 page not found Droneshield, and also Capricorn Metals. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.